Friday, June 2nd, market analysis, Stan Ehrlich. First, I'm going to be out of town next week, R&R, so there'll be no YouTube market analysis next week for the 1 week. And thank you for listening and viewing. I'm going to start out as I usually do with the S&P 500. We have some very significant information today about a potential high. And I like to say these things when markets are zooming straight up because I use relative strength and also various chart patterns, including, very importantly, bullish or bearish engulfing says major portion of the ER signals. This is now the S&P 500 1-minute chart of today so far. It's 10:16 California time. And we opened significantly higher. We came down a little, but we did not close a gap, which I'll show you on the daily chart in a minute, which is all over the place. Not necessarily a good thing. It could be an exhaustion gap, and that's exactly what I'm about to imply, meaning today is a potential high. All right. So maybe too strong, too quick. There's a gap to close below the market. Let's shift off, and now you can see 5 or 6 days here, to the daily data chart on the spider. And true enough, we have new highs for the trend. There's nothing wrong on an intermediate to long-term basis with that, but the way we're doing it and into the price ranges we're getting into, that is the minor problem here, minor. So back in August, the market topped out in an overbought condition, very overbought condition, in that price range, and produced more evidence that that was significant going back even further in time. You can start drawing that resistance area, support and resistance area, which is kind of wide, way back in May of 21, 2 years back. So here we are again. And what's happening? You leave a gap behind. Gaps are almost always closed. This could be an exhaustion gap. They're typically a very big, strong up day if you're talking about bullish exhaustion as opposed to exhaustion weakness. So this is typical. You're in a price range where it's topped out before, and you are getting almost overbought. That's the combination I'm calling a very significant warning that you're about to have a correction. Now, that does not change the overall trend at all at this point. So be wary. This looks very tempting, enthusiastic, and like a major bullish breakout, which it is, but they almost always have some sort of correction right afterwards as well. So here comes a dip early next week, I would think, and maybe new highs before the close today. I wouldn't be surprised if it just jumped up to the 430 I've been talking about for several days, and that is very close. So I got 2 more points to go. High and last, looking great. What about collaborating with the other indexes? We also have a gap to close in the DIA, which has made a new high for a whole month all of a sudden, which is great. I'm totally expecting, and I talked about a last shoulder low last week. All of a sudden, this looks a heck of a lot more interesting. I've already got the neckline drawn in, and that's the, clicked on the wrong one. There's the neckline. So it is approximately 341 next week, give or take half a point or something. And closing above that's going to increase and be a breakout of a head and shoulder bottom. We could go down and close the gap real quick Monday, Tuesday, Wednesday, and come back up good by the end of the week. That'd be fine. Nothing wrong with that. Gaps are almost always closed. But this one looks like a breakaway gap to the upside at the, weirdly enough, the same time that in the QQQ, we don't have any gap at all. And this has been the strongest index all along. It's losing momentum, losing strength, and up against the bottom of an old gap to close way back April of 22. A variety of reasons to believe that we've just reached or are about to reach a little bit further. levels, especially if we do it quickly like today, and it may be over already. And we're going to come back down. Now, you know that Qs have this gap way down here to close, and that's generally around 345, 335. And we're 55, 355. So that's a bit of a break, but it wouldn't damage the trend. It wouldn't do anything for the long-term bullish situation. In fact, it's kind of healthy. All right. Enough of that. Let's go to futures. The E-mini, of course, is going to look really good. And it has made a new high since today, since last August 26th, almost a year, since this is June 2nd, 10 months. So that looks great. It's a bullish upside breakout. No ifs, ands, or buts about it as long as we stay here. The higher the volume, the better for breakouts. It tends to legitimize those kinds of technical situations. But also you get high volume on blow off tops. Qs been overbought for a few days. Let's go look at something else. And we've got some brand new stuff today. Bonds hit resistance on the way up yesterday, and they're pulling back a little bit. I can't expect much more than a modest dip more, but not much. And then pushing through yesterday's high on a closing basis and starting to eat into this resistance, which could lead to that major breakout I believe is coming sooner or later in the next month or two, I expect. And that would be a closing at 135, let's say. Yep. Next. Same kind of thing for 10-year notes. The price levels are different, but the market came up and closed. Come on, mouse, behave. There we go. To a resistance area in the 10-year notes and pulled back a little bit today. No surprise, nothing wrong with that. I just am not expecting lower lows of the last few days, and I'm expecting to start to see higher highs quickly. And I do want that major upside breakout 118 plus in the next month or two. Next, we've got crude bouncing back up again the last couple of days, now back to this resistance area. I think it's going to stall out, and I think we're going to see it challenge the lows of a couple of days ago and challenge the support area 6450. And this time around, third time down, going to break it and break out to the downside. Next, heating oil. Same kind of story, not much different. We're in the resistance area. We've been there already a couple of weeks ago. The trend is down. I think breaking below the yellow dash line, I've said for weeks and weeks now, is going to be, even before we broke the green line, that's going to be a huge bearish breakout. And I don't think it's going to take long to do it. Wouldn't be surprised if it's next week. Natural gas gave us a great sell signal a few days ago, and there was 1, 2, 3, 4, 5 days straight down after that sell signal. Today's the first day up. It's a Friday weekend short covering. It is oversold yesterday and today. No surprise, we're starting to work our way back up a little. So how much? The 229 area looks like the first result, yesterday's high, or maybe a little bit higher than that, but not too much. And then lower. Next, gold. We got a great buy signal a couple of days ago and a complimentary one yesterday, which did not work. The buy signal from yesterday has already hit our fail-safe exit, so we lost a little money on that. But if you are still in from the previous lowest low for the trend so far, great. Just because this yesterday buy signal didn't work does not mean that the lowest low on May 30th isn't going to work. It's got a very good chance of it. I don't like the way things are looking at the moment, but that's my looking, and this is a trading system. You're not supposed to inject personal opinion, but basically that's what I'm doing, but I caught myself. Now, the double top in silver was 2 bearish engulfings. That was fantastic. We also got all 3 silver, gold, and platinum, the lowest lows in February and early March. So now what we have is a bullish engulfing after it reached a downside objective And today is the first day down after that retracement we needed to get into an ER3 trade. Great. So a little bit of a dip at the end of the week, I have no problem with. We didn't get overbought, so I can't give that as an excuse. But neutral territory is no big deal, and this is kind of normal. Looking for higher prices. Next, platinum got oversold, bounced a little, coming back down today. This looks like it could make new lows pretty quickly. I don't see anything stopping it. There's nothing particularly great in this area. So obviously bearish, have been for a while. Double top formation, downside breakout commentary a week and a half ago. And involved in the top, we had a bearish engulfing ER sell signal, but it wasn't particularly profitable. A little, not bad. And next, natural gas. I meant high-grade copper, sorry. Got oversold and is rallying pretty good, but it's now almost to the area I think is likely to stop it from rallying, and that would be 3.83-ish, and that is not too far away. Plus, we're getting a little closer to overbought, not quite there yet, and a quick jump in the next couple of days, or a strong close today, for example, might be able to make new highs in the RSI, and obviously we get as close or closer to that resistance area. So I'm looking for a top in high grade soon. Soybeans are almost the same, actually. Resistance area, getting up there in RSI a little bit, making new highs for a modest week and a half or so. Nothing super bullish about this. We did turn around in oversold conditions. That's normal. Next. Same commentary for soybean oil, turned around in oversold conditions this week. The rally is not quite finished. I don't think we can get up to 51 and then down. Next, soybean meal, oversold conditions again. Not much of a bounce. Bearish, looking for lower levels. Next is corn, oversold and did bounce very nicely and not too far from overbought. So if today's a good strong close, likely can jump up maybe to that major bear trend line or in the ballpark of 630, that could probably produce a rally high. Next, wheat. We're in between a rock and a hard spot. Neutral RSI, definitely not any particularly great resistance right here. Maybe up to about 670, and then we'll turn back down again. Next, live cattle, blow off top. I mentioned it yesterday. We are net higher on the day by a modest amount after being significantly higher again, but the closing prices are not too great. They're relatively close to the low of today and around where it opened. This could be a high day. Looking for a very sharp downside correction when this thing turns, and this has a high point rating. Next, lean hogs, almost a reverse commentary, strangely enough, and oversold conditions very substantial, very low. Yep, anything around 10 or lower is getting way down there, and this was like 11 or so. I think the rally could continue a little bit more. The first spot for trouble and turning around and going back down is 85. And there's a chance it might get up to the low 90s next and then go down. We're into exotics now. Orange juice got a rebought, dipping back down. Bull trend, there's nothing wrong with this. Kind of expecting it to bottom out very soon. I kind of doubt yesterday's low was the lowest low, but there's a small chance of that. It was in some support, but not particularly well defined. But it's a great stair-stepping bull trend here at the moment. Yeah, it's very normal. You don't see any blow off top yet, just minor overbought conditions short term, and that's typical. Next, cocoa. Almost the same commentary. I thought that this could be a head and shoulder top, and I drew the neckline in. Today, we went below the neckline for the first time somewhat significantly and did not stay below it. That's an absolute no-no. This formation is not a head and shoulder top. We had the bearish engulfings potentially at both shoulders. Now, if this goes straight down all of a sudden, I can't claim head and shoulder, but it sure would look similar. timing is off a little too much. It's not horrible, but we need to slam dunk like today, below today's lows, in order to be convincingly bearish on a breakout of sorts. Ain't happening. Next, cotton, right at resistance on a rally. This should top out very soon. It's not that close to overbought, so it might poke its head up even a little bit further, and I would say to the 90-20, and then back up and start to turn back down. Big sideways trading range, no trend involved. About the only market at the moment that I can say that about. Sugar. Looks like it topped out on overbought conditions, double topped out price-wise, and is in the process of convincingly breaking out of that little double top on a new low close for the trend down, probably, but not by much. I'd like to see it below today's lows on a closing basis, which is going to be Monday. Next. E-mini, of course, we started out with high and last, doing fantastic, but that is the way tops look. You guys have a great weekend.